Good afternoon. It's Alan Barry Labucan here. I'm the chief market commentator for Agoracom, and we have a special guest today, Pat Boland. If you must not have been watching business television in Canada if you don't know his face. Thank you very much for joining us today, Pat.
My pleasure, Alan. Great to see you again.
Yeah, well, Pat, we sure picked a great day to do a show today with we've been seeing some pretty impressive trends prior to today. The U.S. dollar has been on an unprecedented move. The May lows were around on the Dixie. The dollar index was around 70, let's say 78 and change.
Yeah.
It's now nearing 100. That's almost a 50% move in a matter of 4 or 5 months in a currency. I've seen those kind of moves in one currency against another in the past, Pat, never in against a basket. And I think a lot of that had to do with interest rate expectations. And today the Fed spoke. What do you think of what happened, Pat?
Well, it's not what they said, to a degree, I guess it is, but it's what they didn't say. They took out the word patient, that they would go at this patiently kind of a thing. So that sends a very mixed message to the marketplace at the very time that they lowered the expectations for growth in the economy. Wow. Okay, so what does this mean? It means, according to my interpretation, but there's a lot of opinions out there, we're not going to see a change in interest rates in June. More likely we're going to see it in September. They want to see more economic evidence that there's a change in the economy happening that's real and measurable. There are a lot of people out there that are, the Fed's mandate is too. The mandate is to address inflation, and the mandate is to address jobs. And they touched on jobs. They didn't really touch on inflation in this report today, and that's because a lot of people out there are talking about deflation. If you look at producer prices, for instance, in the United States, they've been collapsing, which is good for a lot of companies. If your wholesale prices are going down and you can maintain your retail prices, that's a great thing. But can you maintain those retail prices? Is there expectation amongst the American public to see lower prices, in part because of that very strong American dollar? It's all happening at the same time that housing has got a little wobbly in the United States, and people are saying, housing starts and inventory climbing a little bit. People are saying maybe housing isn't as robust as people thought. And so the American consumer is torn. His house is maybe worth what it is, or maybe it's not, and prices want to come down because of that strong American dollar. Maybe they put off buying things for the time being. So I think the first order of business is to get the currency right, and you're absolutely right in focusing on this massive move by the U.S. dollar. The U.S. dollar's had the big move up. It can only come down from here. Now, whether it does that as a partial retracement and resumes its upward trend has a lot to do with the economy, and I suspect it'll be months before we get an answer there.
Yeah, and to me, I always look for the canary in the coal mine, Pat. And I've been talking down the U.S. dollar. So, I mean, it's not like I'm here to pat myself on the back that I picked the absolute top. I've actually been very bearish on the U.S. dollar for probably the last 10 points in the Dixie move. So I've been wrong for a while, but the canary to me in the coal mine is when you start to see the companies in the United States that do a lot of business outside the United States start to squeal. And the dollar has now reached the squeal point. When they're trying to bring that money back and report it in quarterly earnings, when we've already got a market that is priced in fairly handsome premiums, they can't really afford to see that much pressure on their earnings just because of the currency. And so now corporate America is starting to squeal. And I think that all of these things transpiring at the same time, I'm not a real big believer in conspiracy theories or anything like that, Pat, but obviously these big entities, they do look at what each other is doing. And I think we've got a confluence of events here that suggests to me that I don't think that the Fed can raise interest rates very significantly. I think if anything, they can do maybe some symbolic moves of a quarter to a half a point. And I'm even and I didn't believe they would do it in June. I'm still not believing that they're going to do it this year. And even when they do it, I don't think it'll be that significant. But what I think has happened, Pat, is the way that the dollar index is traded. It's almost been like they're looking for 2 point move on the interest rates.
Wait,
Um,
a two percentage move?
well, what do you think when you see a currency move up that aggressively for no fundamental reasons? It's not like you
Oh,
know.
there is a fundamental reason. There is a fundamental reason in that even though interest rates are what below 1% and now forecast to stay below 1% till the end of the year, it's still a better return than you're getting anywhere else in the world because the rest of the world is in competitive devaluation. And in that scenario, some of the European interest rates are negative, significantly negative interest rates. Where are you going to put your money? You're not going to put your money in Europe. Not in the bond space at least, you're going to put it into U.S. dollar, and you're going to put it into, funny enough, American stocks. Even though you're absolutely right, the repatriation of the U.S. dollar is hurting the multinationals. They're not. They're not. The multinationals aren't the ones giving you the big moves these days in the stock market. It's the broader market, and it's all based on an improving American economy. And I will point out, as I said earlier, it's still questionable whether that economy. I've been bullish on the American economy for a couple of years now, and I'm starting to see that maybe it's playing out right now. It's getting a little tired.
Well, and getting tired at near zero interest rates is not a time when you can raise interest rates.
That's exactly, and that's why the stock market is responding favorably to this because they see low interest rates for a longer period of time as a
Now,
constructive thing.
Pat, it wasn't just the stock market that moved. We saw a major trend reversal in the US dollar against practically every major currency. We
Yep.
saw the gold price swing from being down $10 to up 20 some dollars at the end of the day. We saw oil do a big trend reversal as well. I actually believe that this is more of a big trend reversal that we're watching happen here, where that dollar stops being so strong. I mean, Pat, a lot of the numbers do look good, but it's only in the context of being the you know the I don't want to say where you're the prettiest or the least pretty girl at the dance or something like that. You know what I mean, Pat?
Yeah.
It's like you only can go one direction, but that's not usually a good reason to go that direction.
Your point is very well made in that a lot of the commodities, because commodities are priced in U.S. dollars, have had significant moves. So then you have to go back to the fundamentals. Let's just focus on oil, for instance, for the time being, because we've seen a lot of pressure on oil recently, hitting those 6-year lows, and the Canadian dollar going along with it. Who says we don't have a petrol currency? That's a discussion for a separate time. But oil prices continue to go down, not because they're priced in U.S. dollars, because oil is priced in U.S. dollars. It's because there's lots of oil out there. There's lots of oil in the system in the United States, and there's more that's accessible to the marketplace. So that the fundamentals for oil have not changed. Yes, you had a huge move today. Technical traders will say it's a complete reversal. I'm not convinced, and I believe that oil will still stay in the trading range that you and I talked about last time, between, say, $40 and $50.
Well, and that becomes a structural problem with the industry, Pat, because the cost of producing oil has gone up a lot in the last 10, 15 years. And they just can't.
I'll take an issue with that because you're right. Back in the old days, I remember when the oil sands were getting started in Western Canada, and people said, at $10 we can't get it out of the ground, but at 20 we can make some good profit. Well, guess what? Canadian Western Select is at $30 right now. It's nowhere near West Texas Intermediate. I don't think they're making any money, and that's why you're seeing the jobs get cut there. So your point is well made that the costs have gone up, but a lot of those costs are already sunk into the oil sands.
Your capex cost, yeah, you could be, yeah, that does make sense, yes. So they can. It's not that they can't continue to operate. It's just that we're going to start seeing a lot more of these announcements, like we saw recently with the big, huge losses in the oil space.
Yeah.
I don't know how long they can continue those losses for, Pat.
And job losses. You're going to see job losses come with that as well.
Yeah. So I'm I'm bullish on the oil right now. Oil stocks more than oil itself, Pat, because I think the punishment that the oil stocks got relative to the price of oil has been disproportionate. And I think that that creates a good trading opportunity because when you get them so beaten down, Pat, it just takes a sniff of something good and you
Well,
get a big pop.
we have seen that a lot of the oil stocks have started to improve in advance of any kind of a move by oil, which is a flag to me that either they had guessed that the oil price had moved higher, or people are a little bit anxious to get in to that marketplace. Opportunity seekers, not unlike yourself.
Well, and I just think that because they swung, they always swing too far in either direction, Pat. And I just think that they swung so far in that negative direction. I mean, and what I do and sort of the kind of companies I look at, Pat. So when the price was coming down, I was watching them all get beaten down, and I got a select group of, let's say, 10 companies. And then from those 10 companies, I really tried to find the ones that have the best balance sheets. And if they've got the best balance sheets, generally that means they've got good management. And I've got two that I like a lot in the oil space right now. One's called Torque, and the other one, that's TORC is their name, and the
Yep.
other one is Chinook Energy. Those are two smaller ones, but one of them has not had to lower their dividends, even though the price has been down so much. That's Torque Energy. And then the other one has still been able to maintain their exploration. So that means they've got their funds in good shape.
Yeah.
So those are two that I think are really beaten down, and that's really the play that I see happening, Pat. Even if you think that gold oil could bounce between, let's say, 42 and 52 and keep bouncing, in there, if you buy the dips and sell into the rallies of good quality oil stocks, you can make a lot of money. Now, if I'm right, and this is a big trend reversal in the price of oil, then those stocks will do extremely well.
And I totally agree with you in that you're talking small cap companies, oil and gas companies,
Yes, yes,
as
yes.
opposed to the broader indices, which are have already started that move. The small caps have been totally ignored, as you and I talked about in the past, and that's where your leverage is going to be if you have a solid operation, as you just described. I'm not familiar with either one of those companies, but that's what you're looking for.
In the case of Chinook Energy, when the first big down move happened in oil, they got down to $1.05. Right now, they're trading at $1.30, and they've got good money in the treasury, well managed company. Torque, similar kind of punishment, and now they're starting to come off of it as well. So yeah, that's where my thinking, the best play for me that I think investors can look at. Now it's all dependent on your risk tolerance too, Pat. The more risk tolerant, less risk you want, you have to go up the ladder. Maybe in that case, you play an index, like an ETF or something like that, where you could play those ups and downs. I think quite significantly over the next year.
Yeah, I hesitate with the index kind of approach on this for the very reason I said that they've started to move in advance. And if you're right, if it is a trend reversal for oil prices, I get it, but I don't want to jump the gun.
Well, with the ETF, you can play the stocks or the oil itself.
Yeah. Oh yeah, absolutely. And as I say, I don't think we've turned the corner on oil. But you know, it's interesting you bring up oil because the other area that you talked about last time was gold, and we've seen gold. And I made the point then, and I make it again. Gold is behaving more as a competing currency to the U.S. dollar in this particular case. And so to make the bet on the currency is a difficult one unless you've got a lot of conviction.
Well, and I think that it goes back to what you said a little bit earlier, Pat, about who are you going to go to the dance with when there's only so many partners, right? And I think that's why now gold is becoming more of one of those potential dancing partners. Back when we didn't have the euro and all of those countries had their own currencies, the currency traders, they had so many opportunities. They didn't need to. Now it's much more consolidated with the euro consolidating into one currency. So you don't have as many choices. And I think it's pretty clear that, again, gold is a good play right now. I think not just because I think we're having a significant trend reversal, but again, it's gotten so beaten down that it's it doesn't take much to make a rally. Any sniff of any kind of good news, and the gold stocks especially start popping up pretty quickly. So I'm liking gold a lot these days.
Yeah, it's interesting. I had a lot of conviction on gold, say a year ago, say $1,200 or give or take, maybe 1150. But then it moved up to that 1300, and the way it came back so quickly and found no support at 1250 and 1200, the move was a little bit erratic to me. And again, I'm approaching gold the same way I do the commodity or oil, much more cautiously. And today is evidence, you get a, $22 move in gold today immediately after Janet Yellen starts talking. It's just going to be volatile for the next little while. And to get back
and you know what, Pat, I think the way to defend against that volatility is don't be a buyer on up days. Don't worry, you're going to get down days. If you just try to be patient and just look at the down days, that's your opportunity to add to positions. Right now, I think we're in it's going to be a challenging market for investors to make money out there, Pat. They're going to need a lot. We always say it's a stock picker's market, but it truly is. Right now, I think you're going to have to be really selective. In the past couple of years, there's been a pretty easy trend: just buy U.S. dollar, buy U.S. stocks, and you're going to do pretty good. But I think you got to get a little more creative and start looking at things like, hey, maybe it's time to start looking at some good euro stocks that have been beaten down. Maybe start looking at some euro ETFs or the euro currency. They're going into a period of lowering interest rates, so maybe they're going to grow faster.
Well, in fact, we've had those conversations over the last year or so, and yet the American market keeps steaming along to record highs, the broader American marketplace, while the currency is also stronger, so you get the double win, if you will, on that. I think it's not a point at which you sell everything in the United States because it is at records and because you think this tide has changed, but I could see definitely lightening up, taking some profits, and moving them into the areas you're talking about.
Well, and I also think, Pat, if you want to stay to the U.S. market, what I perceive happening here, and I saw this happen in the past, where valuations get to a point where it takes a couple years for the stocks to catch up to the earnings, where it starts to be a more reasonable valuation. And what that basically looks like is you go into a sideways trend with some volatility. So, there's an opportunity there if you want to stick. I mean, I don't think that we're in a situation where I would be super negative on the U.S. stock market, simply because it is a bastion of something good in the world to put your money.
Yeah.
I just wouldn't be rushing into the U.S. dollar right now. I think there's other opportunities out there.
Totally agree with you. Now, here's my question of you then. If we're taking that approach that we're going to see more volatility in the gold sector, do you have gold plays that you're looking at right now?
Yeah, actually, Pat, I got some really good gold plays. In fact, I've been sort of talking in the last 6 months, Pat, for a long time, I was really got away from consulting to public companies.
Yeah.
And I was just really focused on building my market commentary stuff. And about a year ago, I saw how beaten down everything was. And I started to work with a group of guys that one of them's been a golfing buddy of mine since we were in our 20s.
And, relationships, eh, Alan?
Yeah, he happens to own a golf course too, so it's kind of a nice buddy to have. Anyways, he's one of my partners, and we've put together a diamond company called Dunedin Ventures, where I'm the special advisor to that company. And then we just did it with a gold company, and it was announced, funny enough, today, Pat, which I actually think might be a pretty prescient time in the price of gold. But that's not what we were trying to do with the timing. It's a company called Great Bear Resources. And Great Bear, the symbol's GBR. It's a sort of a tiny little shell, Pat, that I'm very good friends with the folks at Osisco. Osisco through Andre Goumond, who was recently they merged Virginia Gold Mines and Osisco. Now Osisco is will be one of the largest royalty companies in the world, and
Oh,
they also had a bunch of exploration projects. And we were able to do a deal where we're taking one of the exploration projects off of Osisco and putting it into this company called Great Bear Resources. And so it's an exciting time for me today. That's one gold stock that I'm following very closely, Pat.
but it's exploratory. They don't
It's
have.
very exploratory. It's actually trading at a nickel today, Pat. And so don't go rushing out to buy any stock. It's very illiquid. I want to put all the disclaimers on it and everything, Pat, but it's a good one to go take a look at the news on. Some of the ones that I'm
Something a little bit more stable, will you?
okay. I got a one that I've mentioned to you before, Pat, is my number one pick is Rubicon.
Yes,
I
you did.
like Rubicon Minerals a lot because they're going to start producing gold in Red Lake, Ontario this summer. RMX is their symbol. Another really exciting company I like a lot, Pat, is a company called Peregrine Diamonds, or sorry, Premier Gold Mines. Premier Gold Mines stock symbol is PG. And they trade on the Toronto Exchange.
Sorry,
They've
what?
recently, pardon me,
What was the symbol again? PG?
P as in Paul, G as in George.
Okay, just PG. Okay.
They recently did a deal with Centerra, where Centerra and Premier Gold are going to jointly develop a mine up near the Geraldton Beardsmore area of Ontario. And then they've got a couple other exploration projects as well.
Mm.
So I like that one a lot because they've got three multi-million ounce gold deposits and one they're bringing into production. So that's another one that I follow really closely. Another one is here in British Columbia. It's a company called, oh gosh, and I got to get the name here for you. I really like this company a lot. The company's name is Pretium Resources. It's PVG. That's Paul Victor Gordon. It trades on the Toronto Exchange as well, Pat. And why I like this one so much is right now when I'm looking at gold, Pat, I don't want to be paying attention to low grade deposits.
Yeah.
They've got low margins, and in the current price environment, you don't want to be looking at low margin projects. Pretium, Premier Gold, and Rubicon all have high grade projects with much bigger margins. Bigger margins means more room for error, Pat. In this business with gold at 11 under 1200, you don't want any room for error issues. And so Pretium it's run by Robert Quartermain, really well financed. The Chinese just put up a bunch of money for the company. PVG is their symbol. So there's or a few on the gold front that I like a lot, Pat.
Yeah, it's interesting when you talk about high gold, and I love your opinion on this, because high grade gold, because when you get high grade gold, you often have reserves. Now, do those reserves, are they conservatively estimated? In other words, do they assume it's over 100 feet or 10 feet, and therefore the reserves are expanded out? Because often it's just one line of gold, if you will.
Yeah, Pat, in order to come up with reserves and resources, you have to have drilled a lot of holes. And these companies have resources. They've drilled those holes. It's not like you've followed one little vein and you caught it here and then it disappears and you can't find it anywhere else. They've drilled tons of holes all over the place and they're hitting high grade.
Right. Okay. That was my biggest concern. So they've done, all three of those companies have done their work in terms of proving out the reserves.
Extensive drilling. In the case of Rubicon, they're starting production. In the case of Premier Gold, the drilling's to the stage that they're now starting to build a mine there. So they have to be quite built up. And the reason I like Pretium is they're not quite as advanced in the case of Rubicon, which is starting a mine, and Premier that's got one coming up. Pretium, I think, is a takeover target candidate, Pat.
Yeah.
You may remember back in the days when we were on BNN quite a bit, I talked a lot about Gold Eagle mining with you. and we had talked about it 4 or 5 times along their growth curve before they were taken over. I think PVG is another one that could get taken over, Pat, simply because of that issue. Now, you brought up a good subject for me, Pat, which is you started to talk about what those gold companies have in the ground and what they're estimated at. You're going to
Yeah.
start to see a lot of them have to revalue what their resources are in the ground. Here's another thing that they're going to want to do, Pat. A lot of times it's averaging, okay? So if you can average out some of your low grade as a major mining company by buying a bunch of high margin gold, it helps average out everything.
Yeah.
That's why a company like a PVG or a Rubicon or a Premier Gold are very attractive right now as well. There's a lot of big companies out there that have low grades on their balance sheets that they would like to be able to mix and talk about a higher, better margins.
Do those larger gold companies have big cash reserves right now?
Oh, they're sitting on mountains of cash, Pat. They really remember back in the '90s how this is a lot different market now than it was in the '90s. A lot of those big companies back in the '90s didn't always have a lot of cash.
Yeah, that's right.
Nowadays, they got a lot of cash.
Hmm.
Now, can that cash, now that you've got, just like the oil guys, if you're looking at oil stock right now, you better have a well-run oil stock that's got a runway where they can handle this price for 6 months to a year. And that's why I picked those two particular companies, Pat, because not only do I see that they've been beaten down dramatically, I see that they have balance sheets and managements capable of lasting through the challenging period.
Yeah. Well, as we say, likely to be volatile for the underlying commodities, so you want to get some solid management behind you when you are dealing with them.
Absolutely. On that note, Pat, I think it's a good one to wrap things up on.
Okay, Alan, great to talk.
Yeah, it's always great to talk with you, Pat. And as I said, I think we had picked a great timing. People need clarity on these kind of things, and even if they agree or disagree with us, at least we've given them something to think about.
Yeah, hopefully.
You bet.
Oh,
On that note, have a great day, Pat. And
thanks.
to all of you out there, remember, do your homework. This is only about information purposes, and it never replaces your homework and doing your due diligence, speaking with your financial advisors. On that note, you all have a great day, and we'll talk to you soon.